On today's show, we have a very special guest making his second appearance on our channel, Ben from Into the Cryptoverse. A brief story about Ben. A while ago, we gave a shout out to Ben when his channel, I believe, had something like 15,000 subscribers, maybe 20,000 subscribers. And we called Ben the most underrated person in all of crypto. At the time, I had no idea that Ben had actually followed our channel even before he started his. In fact, Ben said that we were actually the inspiration for Ben starting his channel. He liked the fact that we didn't take paid ads, and Ben saw his destiny. I will say this: there are a couple things that in life you can't teach. You can't teach drive. You can't teach hustle, and you can't teach determination. And Ben has all of those things. And on top of that, he is super sharp and he's incredibly talented. And Ben, just like our channel, Ben focuses on the facts and the charts, but he does it through the lens of mathematics, which is really fascinating. And to be quite honest, it's probably the only channel that I would really enjoy watching in crypto. So I know that 99.9% of you probably already subscribe to Ben, but if you are not yet subscribed to Ben, I want you to pause this video and go over and subscribe to him right now. You will absolutely love Ben's channel. Ben, welcome into the show. It's great to have you. Welcome back.
Yeah, thanks for having me, Steve. And you're right, it was the inspiration that started my channel a long time ago. I remember watching you and during the last market cycle. I was a fan of the show. And yeah, when you gave me a shout out, I had 17,000 subscribers. And the reason I remember it so vividly is the shout out you gave like increased my subscriptions by like 10%, like the number of subscribers I had, because I went from like 17,000 to like 19,000 or something after your shout out. So yeah, I do appreciate that, and it's been one crazy ride for sure. So thanks for having me on the show.
Well, you deserve all the success. I think that you're showing it now. I mean, you're dominating. Like I said earlier, your work ethic, you deserve it. You can't teach that. So it's great to have you. I'm excited for the charts that you're going to be sharing today. What do you have in store for us?
So in this presentation, I wanted to show the total cryptocurrency market capitalization. A lot of times we talk about Bitcoin, or occasionally we'll talk about specific altcoins on my channel. But sometimes it's good to just take a step back and look to see where is the entire market capitalization. So, representative of all the interest in the space, not just Bitcoin, not just Ethereum, but everything. Now we know Bitcoin controls most of this curve that we see, because the market capitalization of Bitcoin right now is over 1 trillion. And as of March 9th, the entire cryptocurrency asset class was only at 1.65 trillion. So Bitcoin's market cap was taking up, 60 something percent or so of the entire market capitalization in crypto. So we do know that when you look at this chart, it looks like the Bitcoin price, right? If you didn't really look at the y-axis and you just saw this chart, you'd say, oh yeah, it's the price of Bitcoin. But in fact, it's the total market capitalization. You can see, for instance, a lot of people will remember in 2018 where we went up to just over 800 billion. That's just under the $1 trillion mark. Now, the reason why I like this is because it sort of helps identify the undervaluation and the overvaluation phases of crypto. And when you're in them, it can sometimes be hard to accept that that's where you are, okay? And the reason why I say that is because when we're below the red line, which is what I would consider the fair value of crypto, just based on a mathematical fit, not from any fundamental reasons or anything like that. I mean, that would be a different story, but just based on the data, the red line would represent sort of the quote-unquote fair value of the entire asset class. And when you're under it, this is when a lot of people are fearful. And, this is when the Bitcoin is going to zero. things start coming about and crypto's going nowhere. That's sort of that phase of the cycle. But as we know, as you know, that's among the best time to really move into the market is when we're in this undervaluation region. And one thing to note about this logarithmic regression trend line is that it is monotonically increasing. Okay, it does just generally increase week over week, month over month, year over year. It will tend to go up. And the nice thing about that, one thing that I've considered before, is that the capitulation that we had in March of 2020, in my opinion, was actually more significant than the one we had back in December of 2018. Now, the one in March didn't take us as low as the one in December of 2018, but with respect to, say, the fair value, we went lower. And that the idea is that the fair value is just steadily going up, and we deviated from that further to the downside than we did about a year and a half before, or maybe 15 months before. So one of the things we look at here is we say, okay, well, we can identify undervaluation regions and then overvaluation regions. And then our green line, our upper green line, sort of guides where each market cycle tends to peak. Okay. Now, the first thing we can note is that the green line here is just basically a shifted version of the red line. We could also fit up here. We could fit this curve, and we probably will do so as we get closer to the peak. But one of the interesting things is you can see the first one, we deviated a lot more from the red line. We went well above this upper green band. The second one, we went just above it. And then the third one, we touched it. So then I would say that our dashed green line is likely a theoretical upper limit that we might not be able to reach, because we can see that each peak sort of comes down just a little bit from where it was last time. And there's a great way to visualize this. So the first thing we should say before we go to the next chart is that the trend line, the fair value right now, according to this, is 571 billion. Now, I'm not saying that crypto will ever go back to a 571 billion market cap. I'm not saying it won't, but I'm certainly not saying it will. By the time we come back to it, the market capitalization could be, the fair value could be well over 1 trillion. You know, you can see back in 2017, we crossed above it here, and we did not come back down to it until it was well over 100 billion or so. So the way that we can look at this is we can say, okay, well, right now, according to this, we're 186% overvalued. But we can stay overvalued for years. And this is what I think, this is what we have to take into consideration, is that we can, in fact, stay overvalued for years. If you take the percent difference between the market cap and the fair value line, you get this. Okay, and I love this chart because it generally shows our trend, like our trend. It shows where we are in the cycle. And by the way, this has been shifted by 100% so that we could easily show undervaluation on the logarithmic scale as well. So 100% actually equals the fair value. So a 200% on this would actually represent 100% overvalued. So the reason why I love this chart, so far we have a general macro downtrend line, okay, and it just trends down year over year over year. So each market capitalization peak of the entire asset class tends to move down. Okay, we see we have 3 peaks. Now the first one, with respect to our fair value line, peaked at approximately 2,000%. The next one was closer to 1,500%. This one was closer to 1,000%, just over 1,000%. You might say, well, this looks like it, is a bit higher. You have to remember this is a logarithmic scale, so it's fairly close to 1,000% here. So what I would say is that the first thing we have to keep in mind with this chart is it a perfect thing? Is it going to identically predict the top? Almost certainly not. It's 3 data points. Right? I mean, 3 data points is not something you can really take to the bank or anything like that. But what it could do, like a lot of the indicators that you discuss on our channel, if it's one more area of confluence, then this is something to take into consideration. If every indicator known to man is flashing that we're nearing the top, it doesn't mean that we are actually at the top, but it just means that, well, the risk is there. And if it does come crashing back down, then, well, every indicator suggested it, right? Or a lot of indicators suggested that might happen. So the reason why I like looking at this chart is because it shows that we still theoretically have room to move up this market cycle, right? If this trend line is to be obeyed, and our market cap will peak at this point up here, we still have several 100% to go in terms of the entire cryptocurrency asset class, not just Bitcoin. So we know that Bitcoin will govern most of this, right? So if we are able to make it from, say, this level all the way up here, we know that Bitcoin moving up will likely fill in a lot of that gap, but then hopefully it'll leave a little bit of room over for the altcoins to make moves as well to help fill in the gap too. So the reason why I like this is because, as I always say on my channel, time is on our side. When we're in this phase of the cycle, time is on our side, and it doesn't really matter if we get a correction and we come down and then trend up later, or if we just trend up in the short term and go straight up to the top. We have to be flexible, right? I mean, this is something I'm not always the most, I'm somewhat guilty of myself in the past, is trying to maintain some level of flexibility and say, you know what, I don't know exactly when we're going to go up to this peak. I've always assumed it would be later, and I still contend it will be. But if we go up there in the short term, then so be it. And this is something we need to take into consideration, that if we come back up to this trend line and we put in our fourth data point at, say, 900%, which, remember, it shifted by 100%, which will represent an 800% overvaluation. And an 800% overvaluation today for the fair value is around 600 billion, so that'd be times 9. So that would put us between, say, $5 to $6 trillion. So if the entire asset class were to go to, say, $5 to $6 trillion in the short term, like in the next couple of months, then we probably would be flirting with that upper trend line up there. Now, the great thing is if it takes us longer than a few months, then our fair value will continue to go up. So then we would be always referencing that. So if we're looking at, say, a 5 to 6x multiple off the fair value, the longer it takes us, then theoretically the higher that should put us. I mean, it of course will put us lower on this trend line, but the trend line is decreasing slower than the fair value is going up. So hopefully this is an adequate explanation to sort of just give an idea. When we're in the green band over here, this is like the perfect time to accumulate. You don't really care about what happens in the short term, whether it goes up or down. When it starts making a move up to this region, it's time to consider that the market's getting hot. We've been here before, okay? I see a lot of people say this time is completely different. Of course, each market cycle will have its own characteristics, but in terms of us shooting up to this trend line, you know, we have been in this situation 3 times in the past, in fact.
So a couple things I want to touch on. One, it's a great point when you say we've been here before. This is a comment that I've seen the contrary. It's like, this time is different.
Right.
This time is different. And that's what I've been seeing for years for every cycle that we're in. The second thing I'll point out is, are you trying to feed the fuel for everybody saying that Bitcoin can go to zero? Because this is a technical descending triangle, which the high majority of the time they break to the downside. So Bitcoin could theoretically go to zero based on.
Well, so you have to remember that this is it's the percent difference between the market cap.
I'm just making a joke. I know. Yeah. I'm making a joke.
And the fair value.
I don't believe Bitcoin can go to zero.
Right.
Somebody in the comments will take it seriously. But
yeah, but just for someone in the comments, just remember that it's reference to the fair value, and the fair value is moving up. So the fair value is moving up.
Of course.
Basically, it's just showing that we're having diminished volatility over the macro scale. Yeah, we're having a lot of upward volatility this year, but over the macro scale, say our extension from the fair value is getting lower and lower. So the implication is that Bitcoin will deviate less and less from its quote-unquote fair value each market cycle.
So with respect to this potential fourth touch point, or if we get close, have you looked at, from the math standpoint, of what potential Bitcoin price that could be? Yeah. Let's say that it's a 50% market share.
Yeah, so if it were to go to, say, it depends on when it happens. Okay, so that's the first thing to keep in mind. If it happens in the next 2 months, which, I'm not claiming that it will, but if you just look at the slope of this line, if it continues to go up at the same rate it has been, then we would be hitting this line probably in the next 2 to 3 months. Again, I'm not saying that it will. If you look back 2 market cycles ago, it looked like we were heading toward it, and then we actually had a very nice correction, and then we trended up later on. So it depends on when we go to it is the first thing. So if we go to it earlier rather than later, I would say it's more likely to go to the entire cryptocurrency asset class might go to like 5 to 6 trillion. Now, if we consider where Bitcoin currently is, it's at 1 trillion. Now, I've often contended, there's a lot of models that I look at that, and I'm fairly conservative, as many people on my channel are aware of price predictions. I would say a lot of times for me, the target price for Bitcoin this cycle would be between $1 to $200,000. Now, again, you have to have some flexibility on that. There's no guarantees. There's a risk involved with everything. But if that is true, if it goes to 1 to 200,000, then we would loosely be looking at a market cap of Bitcoin that would be ranging from approximately 2 to 4 trillion. So if Bitcoin's ranging from 2 to 4 trillion, let's just say it's 3 trillion, because you said, let's say, okay, 50% dominance. If it's 3 trillion and the entire asset class is in 6 trillion, then that is where I would see, that could put Bitcoin at around $140,000 to $160,000, give or take a few K, right? So what's a few K among friends, I always say. So that is sort of where I see it right now. Now, if it were to take a while longer, okay, if we had a pullback like we had in 2013, and we came back down, and then we went up later on, if something like that were to happen, then we would be looking at something different, right? Then I think the market cap, the entire asset class could trend even higher, maybe like to 7 trillion, 8 trillion, 9 trillion, 10 trillion, depends on how long it takes us to get there. So this is why I always say, like, time is on our side. If the bull market, it just blitzes up without really looking back at all, then I imagine it won't have as much momentum to, say, go to a $10 trillion market cap. But if it takes us longer, if we pull back some, consolidate for a few months, and then continue up, then I think that the likelihood of the entire asset class going to 10 trillion would be higher, and therefore the price of Bitcoin could maybe be getting closer to that 4 trillion mark, 4 trillion target rather than, say, 2 trillion.
I would say that the slope of this cycle is actually quite healthy. Looking at the data here, it's actually quite healthy. It's not as severe as back in 2011. It's definitely not as severe as 2014. And it seems relatively healthy, a little more healthy than 2017. Now, in 2017, looking at the data, there are two pretty healthy pullbacks. Do we know what percentage those two data points were, kind of like in the middle of 2017?
I don't actually, off the top of my head, I don't know what it was for the entire asset class. I know for Bitcoin, they were 40% corrections, and we know that altcoins tend to correct more when Bitcoin corrects. So I would say they were, at least 40% corrections. If you look at the entire asset class, it was probably higher than that, but I don't know exactly the number off the top of my head. But you're right. I mean, if you look at the last cycle, there were pretty healthy corrections. And so far this cycle, these little corrections we have, I mean, they've not really been anything to get out of bed for. I mean, they haven't even been, they were 30, or the one we had in January was 30%, which is significant. But you can see just how quickly we recovered. It was a lot quicker than last cycle. Now, one thing I would like to draw your attention to is look how similar so far this cycle is with 2 cycles ago. Okay, and I've put these circles on the chart to sort of highlight some of the similarities. So after the peak, we came into the undervaluation region in 2011, and then peaked back out of it. Same thing in this cycle, right? We came into it, we had our 2019 run. Okay, this is our 2019 peak right here. And then after our 2019 peak, similar to back over here, we then came back down lower than we had previously. Again, same thing here. And then after that, we then went back up and peaked our head above the fair value for a couple days, and then another capitulation. Okay, so far this cycle is a lot more, it compares a lot better with, say, 2 cycles ago than last cycle. As we've discussed on your channel before, last cycle was a pretty clean cycle. I mean, you had a fairly well-defined accumulation phase, and then it just systematically increased, right? I mean, with some corrections along the way. This cycle so far has had a lot more intra-cycle volatility, even in the accumulation phase, right? The accumulation phase wasn't even, a clear-cut accumulation phase when it went from, 3,100 to 14,000 in a couple months or so. So this is something to keep in mind. And the reason why I want to draw people's attention to this is, again, I think that each market cycle will have its own characteristic, right? It'll have its own personality. We'll remember it entirely differently than other cycles. But one thing to keep in mind is that we have been in a similar situation before, right? We have been in a similar situation before where we had sort of a lot of intra-cycle volatility even in the accumulation phase. Then we had a major move with very little correction, and it ended up leading to a short-term blow off top, followed by a sizable correction, and then another move later on. Now, again, being flexible, I think, is the way to go, and not saying that we're gonna do exactly that. But the idea of saying, okay, well, it has happened before, would help people understand that it could theoretically happen again, right? There's nothing necessarily stopping something like that from happening. Like one thing that could theoretically happen is Bitcoin goes up another several, maybe another 60% or more. I don't know. I mean, it's hard to say. And then maybe it has a pullback. We consolidate for a while, and then we end up trending higher later on. This is just one of the ideas, and the reason I'm sort of extrapolating that is just based off what happened over here. But at the end of the day, the one thing we do know is that each cycle will be very different, right? Each cycle will be very different, and we'll have to remain somewhat flexible, right? If you look where we currently are, we did have a pretty substantial correction around this point last cycle, but we had also had a more substantial correction before this point as well. So far, this cycle looks a lot different. So whether we just go straight up to the top, whether we go up, come back down, and then go up, or whether we do something like this where we have more maybe like a triple peak cycle or something like that, I think the idea is we need to remain somewhat flexible, and I'm using this model as a general guide for myself, right? And again, it's not perfect. It's a model. All models are wrong. Some are useful, but I will personally use this model to help guide me, and say, okay, Ben, things are very overheated if we're flirting with this line again up here. And by the way, we still theoretically have a ways to go before we're there. I mean, we would need to trend up several trillion more dollars before we're going to be interacting with that line. And I'm talking about the entire asset class, not just Bitcoin.
I think the comparison for the 2020 relative to 2012, I think is interesting. It looks like just from an eye without being in front of the chart, time is the only difference. Right. Now it's moving slower relative to 2012. What I would be interested in is your first top prior to the real top in 2013-ish. What percent is that from the top of 2012? And if we understand that data, then having a hypothetical false top now, we can take the top of 2017 and take that percentage to get an understanding of where it is. It also looks like that first hypothetical top was really based on market structure as well. Looking left, we have that data point as we were coming down pretty swiftly. We had a dead cat bounce pretty heavy, and it looks like that. But I would be curious to see the percentage from the top of 2012 down to that first false top, and compare it from 2018 down to what could be this false top.
So you're talking about like from here to here?
Yes.
This move, and then comparing it.
And take the time in consideration. Like,
right.
At how much faster was it then? Then we can take that information and say, okay, hypothetically, we're moving X times slower relative to 2012, and the top was X percent from our previous high. And it will give us some sort of an idea. It would be interesting to pull that data.
Yeah, I mean, it would. I mean, just briefly, very, very briefly looking at it, just eyeballing it, right? I mean, and of course, this isn't going to be the best way to do it, doing it more rigorously, but just looking at it like 2000 right here, this is about 700. So that's about, three, a factor of 3 between this level and this level. And if we look at a factor of 3 here, this is a bit over 1,000%. I don't remember what it is off the top of my head, but let's just say it's 1,200%. I don't think it's.
We're essentially there right now.
Right. So if you're looking at say 1,200%, let's just say 1,200%. I'll maybe give you a more accurate number later. Divide by 3, you'd be looking at 400. So and this is why I'm saying that, Bitcoin right now is at what, like 57K or something. Um, it's really, it's not hard to imagine a scenario where we break through at some point and things get really heated, and it starts blitzing past 60K, past 70K, 80K, and then people start thinking like this is going to 100K, and maybe it makes it, maybe it doesn't, and then maybe you have a substantial pullback. We consolidate for a while, and then we trend higher up later on, and then we decisively break it. Again, I'm just speculating. I really don't claim to know exactly what will happen in the short term, but it's an interesting observation to look at, say, from peak to sort of an intermediate peak between the next actual peak. And so if something like that were to happen, if we were to say this is around, let's say around between 1,000 and 1,200%, somewhere in that ballpark, we're starting to flirt with that territory for sure. We're starting to flirt with that territory, and this is why I think that people should be cautious, like, because I've seen this before, right? Things can get really heated really quickly, and if we break through 58K and start moving up really quickly, like 60K, 70K, 80, if we do something like that, it's gonna people are gonna be fighting emotions for sure, during that time, and it would be a similar type thing as to what happened over here, where it was trending up, and then all of a sudden it had this huge blitz in a very short period of time, and then a massive correction. So let's just keep an eye on it. I think that's we have to play it one day at a time, and sort of see what happens with Bitcoin, because Bitcoin will always throw us these curveballs that we never really expect.
That's great. I like this chart. I want to come back and touch on this as we progress, especially over the next 1 to 2 months. I think things are going to get really interesting and things are going to start moving quickly. So it'll be interesting to come back and see, are we going to have this first top be a fake top, or is it going to be the real top?
Right. That's the question, and I think we'll just have to see how it plays out on the charts, and then we'll have a hopefully come to a better conclusion. But yeah, I'm glad you liked the chart, and I'm happy to show it again in the future.
Perfect. Now, this is the end of this sequence, right? We don't have another one here.
Right. Right. This is it.
So everybody go subscribe to Ben's channel. You will absolutely love it. He's really taken the crypto world by storm. He deserves all the praise and all the success that he's seeing. Here's his channel right now, Into the Cryptoverse with Ben. Hit that subscribe button. Also, feel free to subscribe here. We're going to be doing another video with Ben, so keep on the lookout, and I look forward to seeing everybody there.
Thanks for having me, Steve.